Good afternoon, everyone. Welcome to the post-market review. It is Friday, July 17th, 2026. We just completed OPEX. We just completed the second full week of July. We have 2 full weeks left. Next week is the 20th through the 24th. Then we have the 27th through the 31st. Let's see here. I had to silence my phone. Regarding positions and stuff, my August calls are not looking as bad, obviously, than my July. The few July calls I did get are not looking good at all, but I'm better off riding those in case we do get something in the next week. So my August ones, I think those should be fine. That's where I bought the majority. So that's the update to the position. I haven't added anything to it yet. I am looking at next week as kind of my window for individual sectors. Okay. I've been waiting for the sectors to do some pullbacks, and we've exceeded all of that in the last couple of weeks. We've actually pulled back more than I thought. So looking at those, if we just scan the sector ETFs here, and then we'll get back to the S&P on how we close. Look at some of the sector ETFs. Okay. So let's look at some of the ones that just have been getting hammered, such as SMH or stocks, right? If you look at this on a daily chart, people will say, hey, look, there is a head and shoulder pattern that is pretty close to completing, right? If you look at this from a harmonic standpoint on the daily chart, you're going to see something a little bit different. Okay, and let me point this out. Right here on the daily chart, this is what would be a bullish shark retracement setup. This is probably one of the most common, when you're looking at sector ETFs, this is probably one of the most common bullish setups for when rotations are ready. So you can see SOX has completed one, semiconductor ETF. So why am I talking about, individual sectors for next week? Because I've been waiting for follow-throughs on these sectors. I knew the S&P was going to do its correction. It did it very early. But in the meantime, the S&P's been consolidating in a very tight range. And now the sectors are finally taking the hits. And I'm sitting here like, okay, here we go. We got windows of opportunity. So semiconductor ETF right here. This paints a picture for semis. Let's go to SMH. Same one. Guess what? SMH. Same setup. Let me draw this here. It's the same thing, okay? SMH actually hit it. All right. Notice there's a couple additional targets here. Can it go lower? Can SMH go lower? Yes, it can. It can go lower. Also, is there other patterns I can look at? And by the way, I'm not going to stop with semis. We're going to look at tech too, because tech's been getting slaughtered. Is tech at a pattern completion? Is there good risk reward to grab stuff next week? That's the question. That's the big question everyone wants to know. Is this going to be worth people's time? Now let me look at this pattern here. Nope, not that one. I want to look at one more thing. No. So yeah, I like this short term. Look at XLK. All right, we're going to look at some of the ones that have been just getting absolutely hammered. Okay, they've been hurting pretty bad. There's May 19th. Let's take a look at this. There's the retracement there. Let me look at a couple other ones here that I had. Nine two. Don't like that. Let's try this. 7-3. 8-3. That looks more like a butterfly. No, I don't even like that either. I would argue that XLK Tech, at least on the daily chart, doesn't have anything of interest off that level. The only thing of interest might be something a little bit lower, believe it or not. But I don't think it's ready for that. I think if semis recover, I think XLK should go up, no problem. But no, as far as the harmonic setup on XLK, not seeing anything, and I'm not going to force anything. If we look at XLY, yes.
Sorry. Does XL comes under the same thing?
This is the 3X Bull ETF. I mean, if you look at it, there is a structure here on it. Let me see. Let's see here. I gotta double check one thing from the low. 618. So you could argue Stoxel would have something similar as SMH and Stox. It would be the same pattern. It'd be a shark. But I'm going to switch over quick to XLY and some of the other ones here, because that's what next week is going to be for me. I'm going to see if there's anything worth taking a jab at. And I do want to look at the ones that look ready. Like XLY, for instance, there's really no structure. There's no structure to really go off of on that one. XLF, we've talked about this for a few weeks. XLF, I think, is one of those that's going to run, and it's already began its run. And it's going to continue into the fall. XLC, which is communications. We have something pretty similar. Very similar, actually, if this one can hold up. I do have a little bit of concern, though, about this particular pattern. Right here. So as long as we don't break this neckline to the downside, communications, I'm feeling good about it. This is one of those tickers that you'll see when you enter distribution with the market. It's pretty common to see your hot sectors like semis and some other ones cool off. And some underperforming sectors like XLC or XLF, for instance, those ones will actually see money flow into those, and then those will spearhead some of these moves. So typically what I'll see is I'll see XLC, XLF, and XLK if it's been beat up pretty bad. XLK is another one that you could see do the same thing. But more so XLF, XLC is something that I'm looking at right now. And tech, I'm a little, that's the one sector that I'm a little concerned about with that. The one of interest, I think the one that I have right now, the most interest is the semi setup, right? Because we knew that going into quantitative exhaustion at the end of May, that semis and tech were going to get hit hard, probably the most. That's just how it's supposed to be. And they are getting hit the hardest, right? But nobody's looking for the opportunities in these ones if there's opportunities that present themselves. So because I don't have quantitative exhaustion and because these both are on discount, that's why I'm going to focus on those particular sectors. As far as the Mag 7 goes, if we're looking at the Mag 7 and what type of structure we have with any of those. So this shark pattern here on Apple is invalidated, which is great, because then that gives, where is that ABCD pattern? Here it is. And actually, there's going to be another one, right? Yep, 3-7. Going to be another one right here. Could be an ABCD. The idea on this is about 2.24 or 2.618, which it's very close. So what I'm pointing out here on Apple and why I'm going over the Mag 7, what we're trying to see is which of these have the most meat on the bone for an impending move to the upside, and which ones don't have a ton of meat on the bone, but they're tracking in the right direction. So in that case, you got Apple just tracking in the right direction right now, making new all-time highs this week. You know, that is good stuff. That you wonder why SPY is sitting up here and it's not going much lower. You look at things like Apple. While the rest of the market is dying, what's Apple doing? And then you look at some of the other top holdings too. Okay. So here we saw Amazon do the pullback. Amazon does have this shark setup, but if the shark setup doesn't pan out, which I kind of hope it doesn't, then we have this, the ABCD, which pushes us pretty high. 20% implied move to the pattern completion for that one on Amazon. So when we're looking at the Mag 7 right now, we got Apple with an ABCD projection, which is basically a trend continuation projection. We have Amazon with the same setup. And we want to look for some confluence here to see if there's confluence in any of these setups. And if there's setups that really just don't look good compared to the others, the ones that don't have a ton of confluence. I would argue Microsoft does not look very good. Now, the one caveat would be, oh yeah, I'm with you guys. My July calls, which thankfully are just my dessert, those ones are hammered the most. August, I think there's still a chance for me. But this setup right here on Microsoft might be interesting. Microsoft and Apple are pair trade AI invested, non-AI. Yeah. So Microsoft's one of them that does not look good to me. Personally, it does not look good. But this is the potential setup we could see if it does turn around here. You know, Microsoft has closed green week over week now for 4 weeks. As brutal as it's been, realistically, Microsoft has closed green 4 weeks in a row. So cannot complain. Actually, no, I shouldn't say 4 weeks in a row. It did close red 1 week, week over week, but still pretty good. Give me a second here. Here's the thing I'm worried about, like Apple puts, for instance, right? Everyone sees Apple making new all-time highs, but they're seeing semis and tech getting slaughtered. And so people are expecting Apple to potentially go with it and for this correction to continue and for there to be no reversal. Could that happen? I think it could, but I actually think that Apple's spearheading the move that everything else is about to do going into the end of July. Because ultimately, July, I'm expecting new all-time highs. Currently, as we stand on the S&P, it's not looking good, but we'll look at that in a second here. But here's that setup for Microsoft I was talking about. We have not yet gone all the way to the 1132. But we're close. Could it? It could. But I got a feeling with Microsoft here, especially, like this thing has been the second week of June, first week of June, first 3 weeks of June, Microsoft fell during quantitative exhaustion with the S&P very well. But you'll notice since the S&P bottomed, Microsoft has held up week over week pretty good. And that's something worth pointing out here. So when quantitative exhaustion happened, Amazon came down during the quantitative exhaustion cycle. It bottomed around the same time as SPY's bottom. And since that bottom, Amazon, week over week, is up. That's the thing to pay attention to here, right? If SPY doesn't have quantitative exhaustion, I'm not expecting any of this type of stuff to happen, especially on these Mag 7s. I think right now the Mag 7 for the most part is propping up the S&P while everything else is getting slaughtered. If we look at Google, Google started its correction the week of or the week before quantitative exhaustion. Bottom that same week, did go a little bit lower the following week, and is rechecking back. So relative to the other ones, Google does not look very good. I'd say Microsoft, Amazon, Apple look better than Google at the moment. NVIDIA, correction for NVIDIA, we had happen going into quantitative exhaustion. First bottom was off the 9th. And then that Friday when we wicked down on SPY, we saw NVIDIA come down. That week, since then, recovered, split the difference. NVIDIA looks kind of bad, like Google. Tesla's the one that honestly is one of the worst looking ones. This one has been pinned down quite a bit. So that's one thing I do have concern for is Tesla relative to everything else. And it does make me question consumer discretionary. I feel like for consumer discretionary, they're going to need Amazon to really push that up. If the market does recover, but Tesla underperforms, Amazon's going to have to pick it up and a few others for discretionary. Meta. Okay, so Meta is actually doing pretty dang well, all things considered. And let's see if I can get this Gartley here. Yeah, Meta still has this Gartley setup, bullish Gartley, and it's doing well. Yeah, since that bottom, that's one of them that I'm pretty impressed with actually. So you can thank tickers like Meta, Amazon, Apple for propping up the S&P and the rest of the market while the other guys, the other big guys, get slaughtered. Meta's been one of the tickers to perform pretty well since the bottom. Okay. Hasn't performed well during the corrections, but you'll see every top here. A lot of the tops here were going into quantitative exhaustion. And I think Meta, similar to Apple, remember, here's the focus that I have for this denial rally. My focus for the denial rally is tech, financials, communications, primarily. Tech, financials, communications. Let's just percentage-wise, how high up is Meta from the time we bottomed for SPY? Up about 19.5%. This one spearheads communications. So while Google's just getting clobbered, Meta's actually holding communications up pretty dang good. So communications, what's spearheading that? Meta. That's the one to watch. That one is relatively strong and it's carrying that sector on its back. Apple. This is the one carrying tech. It's not Microsoft carrying tech. It's Apple carrying tech. So don't short the strong one. That's my thing is I would not be shorting the strong sector leaders, especially Apple. Apple's the strongest, not just as a sector leader, but this thing is spearheading all the sector, all the Mag 7s. I think shorting Apple is a little crazy. Google's not doing too hot, but the sector leaders are the ones that I would not be touching as far as puts go or short. So if my thesis is a tech rally paired with financial sector paired with communications, we have Meta leading communications, we have Apple leading tech, and then what about XLF? So let's look at XLF. All right, look at your JP Morgans. Where's my ABCD pattern? There's one. I do have another one here. Hey guys, I got someone who's saying that the stream failed. Can you guys see the stream? I got JP Morgan on my chart. Katie can see it. Interesting. All right. I'll hop off and hop back on. Give me a sec, just to see if it's me. Katie can see it, so I know it's working for some people. All right, we're gonna try this again. All right, stream should be back up. Back to JP Morgan. Okay, again, my focus right now, what we're talking about, is the sectors that I think are going to be spearheading the next rally. XLF, I believe that's going to be led by JP Morgan as one of them. Probably Goldman. So let's look at the sectors. There we go. I'm assuming you guys can see the stream now. All right, so here's JP Morgan, ABCD pattern. Berkshire kind of looks like crap, to be honest. Let me check something out. On the weekly standpoint, we could have something on Berkshire here. I don't like it. I don't like Berkshire. Doesn't look good. What about Bank of America? Look at some of these other banks. Yeah, look at this. Bank of America just completed this pattern. Let me look at a different one. Because all I'm looking for right now is something with relative strength. So here we got, let's see. Bank of America, ABCD pattern. So I'm showing you guys this because this is where I think we're going to see money go into. The setup's already there. I've already seen these setups too. This happened on the for the Japan yen carry trade. Sorry, after the Japan yen carry trade. So the rally that took us through the fall and into the end of the year in 2024. This is the same setups that we saw, the same patterns, everything. Also the same sectors. All right, so here's another one. So this is Wells Fargo, same pattern, AB equals CD. 618 retracement leads to a 1.618 projection. So I'm going through all of these to show that indeed these are the sectors that, number one, have the same type of setup we've seen in the past, the same time period that we saw the setups. And we've also seen a relative, we would say relative strength comparison between these and some of the other hot sectors. The other hot sectors during this entire thing have just been pretty terrible. Look at XLF. Okay, XLF made new all-time highs this week. Cracked them. So my choices are XLF, XLC. I'm a little more hesitant on XLK. I think XLK will pick up some slack at some point. And I do think that semis have a decent run. I think they have a decent setup, at least short term. Long term, they're going to cool off quite a bit, I think, long term. I think going into 2027, we might see some more problems with those. But I actually think semis, believe it or not, this sounds crazy, but I think semis could be relatively flat. Could be relatively flat compared to some of the other sectors. And then after the correction in early 2027, I actually think semis would be probably one of the best sectors to buy after that. I mean, we saw the rally they went on at the beginning of this year. They're really slow, really flat, and then they just absolutely took off. Okay, let's look at some long-term stuff here. DXY is still sitting at this trend line here, forming lower lows this week. We closed lower this week as well. I keep bringing up DXY because this is a mechanical aspect for the market that I don't want to miss. Okay, so there's something mechanical to all of this here on DXY. Especially going into the fact that we're going into the end of the year and we have all this space on DXY. If they want to implement this, we could get part of the rally, part of the denial rally could be mechanical. You could simply just see the US dollar adjust, and then you're seeing all these stocks start flying from that on top of whatever other headlines there are. Also, I would say the looming idea of prolonged war might create a little relief or a little bit of a sell on DXY. Anticipated money printing, potentially. I don't know, though. I don't think that's a strong thesis. I don't think that's strong enough. Bitcoin. Okay, so Bitcoin is trading at 81.84. This crucial neckline area, the 79, that's been the big make or break on oil. So going into next week, I think the biggest deal for next week with oil is if they prop it above 79. If they maintain it above 79, we could see some problems with that. I think that could lead to some volatility, which is one of the reasons why I'm thinking with what oil's doing here, we do know that every time oil's been shorted to oblivion, it's always been it's never been when oil's already been down. It's been when oil's pumping, like it is now. Slow, gradual grind up. Escalator up, elevator down type stuff. Bitcoin sitting at 64. That's good. Considering all the stuff going on, that's looking good. 65.5 is what Bitcoin needs to clear in order to open the door to 91.9. Okay, these arrows I have on Bitcoin, these are, this is basically a benchmark level, the 65.5 that Bitcoin has to clear to open the door to 91.9, which is the primary target. of this harmonic. So this is what we got here on Bitcoin. It's looking good. All things considered, it's doing pretty good considering this is something that spearheads moves down, but instead it's been showing relative strength with some of the Mag 7 the last few weeks. That is interesting from the context of what I said the past, 6 months about Bitcoin coupling up with SPY once it hits the 57 mark, which it has. So it is interesting to see since SPY hit its bottom, it's still up 2.8%. Meta is up quite a bit. Apple's up a ton. There's a number of Mag 7s that have been doing fine off of the bottom, but the semis have been getting slaughtered. And normally you'd see Bitcoin going down, guys. It's not. Bitcoin is holding steady. It's looking good. Let's look at some sectors for the week. No, not for the week. We'll look at individual tickers for the day. Netflix, biggest move down today. They were down quite a bit. At one point, Netflix was down to $65, which is insane. They closed at, I think, 74 going into their earnings, somewhere close to that. Almost a 12% drop. Semiconductors. Gosh, look at Wolfspeed getting hammered down. Went on a nice run until it didn't. Just looking at some of the structures, I'm just going to go through a list of some of these here. And what I'm going to do is I'm just going to throw up some structures that I'm seeing on semis. I'm just going to speed run it. Wolfspeed, bullish Gartley. MTSI, bullish Gartley. Oh, TSM. Try something shorter term here. 6.2. There you go. TSM. Bullish shark. Right. I'm just going through the sector that's been getting hammered the most. If anything pops up. If I don't see something on a ticker at first glance here, I'm just going to ignore it. No, nothing on Intel here. Maybe some Qualcomm. Let me see. Could go a little lower if it wanted. ARM is pretty close. Yep. There's quite a bit. Not all of them are ready to go. Pretty close though. All right. Mm. Okay, that's fine. Switch this over here. All right. I do want to run through one more thing regarding the indicator today. And then actually I'll answer Teo's question first. So regarding the weekly candle on SPY. Okay. Okay, so first of all, regarding some of the monthly levels here, this past week, we rejected the June open twice, leading to the retest of the trend line. We didn't even retest the trend line. We just gapped down below it and retested it as resistance now. So I've highlighted that here on the chart that we retested that trend line as resistance, the one that goes to your all-time highs. 744 is the harmonic level. We traded above that for a bit today. We closed below it. I would like to reclaim that next week. That harmonic level is very important. Now, regarding your question, I'll pull this up with the weekly. So one thing we talked about the weekly, this week's over, so now it doesn't even matter. But let me pull this up. All right. So the idea here is this 618, when your weekly candle starts off, Okay, and we have these static fibs. One of the things that I use to help gauge whether or not we could get an engulfing candle for the week, and this works both ways, a bearish engulfing candle, a bullish engulfing candle, is this static 618. You draw it from the low of the previous week, and then whatever the high is this week. If it's last week's high, you use that. If it's this week's high, you use that. And then from that, this 618, this is kind of like a gauge to see whether or not we're going to see an engulfing candle on the week. And so what this can do is this can lead to a really big red follow through. So for instance, if you go back to the week of the 26th of May, and see if I can go back to like a 15-minute chart and go all the way back. Okay. So like this, for instance. So this would be drawn from that week's low, from the open, the previous week's low, to the high of either the previous week or the high of the current week. So if this was the current week and today was Thursday, June 4th, right? When you get below this 618, let me show you the static 618. It opens the door to doing a full-blown engulfing candle, which means blowing through the weekly low, the previous week's low, and then some. Okay, so that's how this 618 is used as a gauge. It's a static level utilizing last week's candle, and it does work in both directions, by the way. So this is just for me to identify engulfing candles. So you can see what happened on that next day. Opened below it, rejected it, tested the weekly low, and then boom, right? That is the follow through that we use that for. So if we were to use this for the following week, let's see if I can find it. If I were to flip this around and use this week's high, right? Because we have a red weekly candle this week. So that's the high, that's Tuesday, that's Monday. So here's what this would mean for next week if I just had this up. Next week, if sellers want to stay in the game, just keep us below 749, 750. Because then we'll continue in the trend, which is what this golden ratio is for. If sellers can't do that and buyers step through, guess what? We look for an engulfing candle in the week, which means this level. So that's how you do the engulfing candle with these specified fibs. Now I use 0.382 and I use 0.618. 618 is the most important level, but the 0.382 is kind of just a shallow gauge. It's 0.618 squared, right? So going into next week, if we do start the week off by going up, our contention is with really 749, 750. And if we can't break 750, they're going to shove us back down, break the lows from this current week, and send us down in the trend. But if they do the opposite, if they break that 618, that opens the door to the previous week high, which is 755.88. And instead of a bearish engulfing candle, you get a bullish engulfing candle into the next week. That's what that would be. So a pretty good example of this that I recall trading would be, oh, where is it? Oh, that's a daily chart. Give me a sec. All right, so this was earnings season. I had a structural pattern. This is 2023 earnings season. I had a structural pattern that would take us to way up here. Now, what I was looking for was the reversal, okay? But we were in a bearish trend. We kept going down and down and down and down, right? And we knew earnings season was the last week of October, first week of November. So if I'm going to apply this engulfing candle concept, right? So here's your red weekly candle at the end of October. You're going to draw from the high to the low, and your 618's at 418. And I'm going to go to the 15-minute chart for Monday, October 30th, 2023. And what I know is on this week's candle, if we break 618, we will, we will go, most likely go retest the week's high in this case. So obviously tons of earnings happened into the first week of November as well. So we had some crazy and interesting moves, but watch this weekly candle, how this pans out. So that was Tuesday. Here's Wednesday, right? Big moves. Here's Thursday. Look at this. So we broke that 618 on that Wednesday, closed above it. What did it do? Follow through to the previous week's high. And we did a full-blown bullish engulfing candle into the close of the week. And this was an earnings week. It's crazy to think that we started off down at 409 and we ended up going up to 436, 6.62% in the span of a week on a bullish engulfing candle. But this move here, the 618 move with the close, the rest was history off that. So that's what I use those engulfing candles for, right? And this week I think we almost did just that. Actually, I think we did. Let me double check. We almost fully engulfed. Not quite. Yeah, we would have needed about 739 to fully engulf, and we didn't. All right. I think that's it, guys. Guys, enjoy your weekend. Enjoy your weekend. I'll see you guys next week. Pray for everything going on in the Middle East. Pray for the soldiers. A lot of crazy stuff going on. I hate to see it. But take care. I'll see you Monday morning. We'll start at the pre-market stream again. And, test out the that indicator. Those of you that I provided it to that have the indicator suite. You can go through it. You can use replay mode, and you can kind of watch the numbers change and what the price action does as a result. So, all right, guys. Have a good weekend. Cheers.
Thanks, Jagger.
Thanks, Katie.